Hey, what's up, everybody? Welcome to Trade Like Nick for Friday, May 15th. So, we're going to do a quickly weekly recap. This is what I like to do every Friday, see what's going on in the bigger picture, and then zoom in to see if we can find any opportunities for Monday. So, this is a very peculiar candlestick here. Look at everybody. The SPX went as high intraday as 75.30 before closing down at 74.08. Now, this, guys, is a big clue that we are in for a potential reversal, right? Because look at this. If you look at where the market has gone over the last 6 weeks, look at how much we've gone up for. We are due for a retracement, right? You would think that logic would say after 1, 2, 3, 4, 5, 6, 7 weeks of bullish momentum that we need to take a little bit of a breather. And I'm looking for an opportunity if it gets down to about 70.30. This prior high could end as a potential support. So now that we have that view in mind, let's go to the daily chart, right? You always want to start from a top-down analysis and see from a bird's eye view what's going on. So what do we see here? We could see that we gapped up yesterday and we reached all-time highs, barely peeking through 7,500, a big round psychological number. Today, notice we gapped down. Look at the big gap down. You know, a candlestick, when we close here and then we open down here, we gave up all of yesterday's gains from the open, from the jump, and then we sold off even more all the way down to 7,400. Another psychological number, 7,400. So then let's go look in the microscope. Let's look at intraday trend to see actually what happened minute for minute. So look at this big gap down, right? This is what it closed at yesterday at 7,500. It opened at 74.45. We were down 55 points from Jump Street. Now let's zoom in and you can see the price action today. We went all the way back up, poked above 74.50, which was a resistance level that I identified early in the morning. So what you could do here is sell a call spread, right? Why don't we sell bets? Because there's always people that are trying to bet that this market is going to go up. Well, guess what? If they buy an option and they're betting in it going up, I could sell this to them, right? I could go in and sell this option and take their money because in options trading, it's just bets. You can either be on the winning side of the bet, right? Or you could collect the bid. You could collect premium for taking that bet. And each bet has a probability of expiring. Let me show you quickly what I saw, why 74.50 was a resistance area, because once you understand how to look at the volume and the open interest, in other words, how to think like a market maker, because we all know that market makers have to hedge themselves. But look at this open interest contract. That is not a coincidence that there's 142,000 contracts traded. This is the volume, folks. This is what's happening behind the scenes, 74.50. So if I go to the chart, you layer that with your analysis at 74.50, you could say, oh, you know what? This is a heavy resistance area, right? This is the magnet. This is the gamma that's being built up, the pressure that the dealers have to hedge against, right? So once we get up to 74.50, it probably ran some stops and proceeded to go all the way back down to near the lows of the day. We closed at 74.08. Well, guess what? Was it any coincidence that the market bounced off of 7,400, right? Right off of the first 30-minute candle? It's not a coincidence. If you know how to spot patterns, how to read patterns, the next step is to create a high probability trade that reflects that pattern. So now going into Monday, I'm going to be kind of bearish, right? I'm going to be looking for bearish setup. So here, see how there's 3 days to go to expiration? This is going to expire on Monday. See the 0 days? The 0 days already expired today, right? All the winning bets are highlighted in gray. These are all the winning bets on the put side. This is all the winning bets on the call side, right? These bets actually have real value, because if you think about how does a bet have any value? Well, it depends. What is the strike price? Well, let's take the easy math. 7,300. This bet says that I think that the S&P 500 is going to stay above 7,300, right? It is worth $119. So if you bought one contract, that's per share. So if you bought one contract, that would move the decimal 2 over, which would be $11,000. So now, how do you calculate how much money you make? So this is how the math works. This is your first math lesson of the day. Where did the index close? The last price it closed at was 74.08, right? You made a bet that it was going to stay above 7,300, right? But it closed way up here. So guess how much this bet is worth? Well, subtract 7,300. Whoops, that should be a 3, right? Your bet went up how much? 800. 4 minus 3 is 1. So your bet has $108 of value. It's called intrinsic value. You know why? Because you can buy the stock at 7,300 and then go sell it for 74.08, the current market price, right? Remember, a bet just allows you to cash in at that strike price. So you could cash in at 7,300 and then go sell it right away in the market for 74.08. You make $108 per share. But remember, an option has 100 contracts, or for this, the index, the multiplier is by 100. So you actually made more than 108. You got to add 2 zeros to that. You just made $108,000 if you, depending on how much you paid for that bet. See how this game works? The math doesn't lie. Everything is math based and everything is based on probability. And this is why I want to react to our first video of the day. I'm going to show you how probabilities is just like gambling, right? This is a lot of the analogies that we do in the market is based off of a bet. Do we think it's going to go here or here? Well, the same thing is in gambling. And in the end, we are in the business of probabilities. And if you know how probabilities work by the distribution curve, the bell curve, you know how to position yourself to sell when the edges are on your side. Because in the end, that is our edge as a trader. We are a seller of premium. We do what the rich do. The rich sell insurance and they sell bets at the casino. So if you want to have that wealth, you want to achieve your financial goals, you got to have the mindset of the wealthy. What do the wealthy do? And do it. You guys know Rich Dad, Poor Dad. There's 4 quadrants. You could either be employed, you could be self-employed, but if you really want to build wealth, you got to start a business and you got to invest. Because these 2 quadrants below, these generate income. You don't have to work. You don't have to exchange your time for money. Here, you have your money working for you, right? When you're investing, your money is earning interest, making gains. If you have a business, it should be generating income every month. The key is if you can combine both, make trading your business, make investing your business. Now you're running your own business, starting with as little as $3,000, and now you can generate income month after month, week after week, day after day, because all these bets all expire in the different time frames. Look, this is day after day. If you want to generate income week after week, then you go out and you sell 7 days. You'll generate income every week. If you want to generate income every month, go sell the 31 days or 28 days to expiration. Remember, these are all just bets, and all these bets have different probabilities tied to them, and they have different premiums. See how this bet, 74.15, is going for $35. Why is it so much more? Because there's 5 days for this bet to expire. So you have 5 days for the stock to actually go way up, the index, or go down. So these have value. See this value here? This is all time value. This is all fear and time. And you know every day that goes by, if you sell the time, If you sell the fear, right, this is gonna decay and get lower and lower. And then that's the premium that you're able to squeeze from the trade. You don't even have to close the trade out at expiration. You could close it out in 1 day, in 5 minutes. It doesn't matter. The only thing that matters is what is your goal? What is your objective? And then you create a plan to meet that goal. And that's the beauty of the markets. You could trade stock, you could use leverage and trade options, you can use leverage and trade futures. You could do so many things, but with leverage, there comes more risk. But risk gives you opportunity. And if you know how to manage the risk by understanding what options are, how they're priced, and how to determine when they're mispriced, when they're overinflated, when there's fear in the market and people are desperate to buy insurance, that's where you step in, sell them the insurance, collect that inflated premium. And then as the premium shrinks because time decays, volatility subsides, then you buy back that policy, close out the trade, right? Sell it for a few days, close it out. You don't have to wait till expiration because who knows, they might get into an accident. The stock might break through your strike price, right? You don't want to take that risk. So lock in 20, 30% of the max profit and then move on to the next trade. Not only does that help you increase your probabilities because through the Monte Carlo simulation, the earlier you lock in profits, then the higher the probability of that trade winning. So let's go back to gambling, the casino, and how both of these interrelated to each other.
Blackjack, poker, chess. Have you ever wondered why some of the greatest financial minds excel at all three? From the poker tables of Vegas to the trading floors of Manhattan, Wall Street tycoons have long walked in both worlds. But the sharpest minds in finance aren't just in it for the thrill. They're making calculated moves based on a deep study of probability, risk, and knowing when to make their biggest bets. It's the same playbook they bring to the casino, and understanding how they think about games like blackjack or poker can unlock important lessons for the market.
I've been barred from many casinos, and ironically, the first U.S. casino I was ever barred at is Bally's.
This is Boaz Weinstein. He's known for some pretty massive bets, including taking the other side against JP Morgan's infamous London whale disaster, where he was able to make his firm nearly $300 million by some estimates. Like many successful traders, Weinstein is also a gaming prodigy. He became a chess master by the age of 16, and he's a skilled blackjack player with the rare ability to count cards.
It's a game that I still, this many decades later, I'm attracted to the challenge of it, figuring out what the right bet size is, using a certain risk tolerance. I feel like is very connected to a strategy I employ at Saba Capital.
I also want to just kind of set some of the basics here. We're at a table, it looks like, with $100 minimum.
So I'm going to bet between $100 and $2,500 a hand, and we'll see what happens. Card counting is not a foolproof way of winning. The odds of me at the end of the session being up with you probably is only about 60%.
So the one thing I want you to realize is, number one, this guy is a very successful trader, right? He took the other side of a JP Morgan trade, made his company millions. He is a numbers guy thinking in probabilities. That's what we as traders need to retrain our mind. The secret mindset is the seller's mindset. You need to learn how to see where the retail traders are and sell them that bet, right? Because when retail traders start to act irrational, which is actually predictive, it is actually a predictive behavior that humans will oftentimes act irrationally when it comes to trading. And so when they're desperate and they're irrational, they're willing to pay more for an option or a bet. Now you know when this bet is mispriced. This bet should not be worth this much. But because so many people are acting irrationally out of fear, out of greed, out of emotion, now you can step in and kind of take advantage of that. And you position yourself to take the trade when the odds are best in your favor, right? Don't try to predict, wait for it to happen and then jump on it.
Okay, let's get started then.
Do you show the burn card?
We do it if you ask.
Yeah, so I'm going to ask. Normally I wouldn't because it kind of says I'm a card counter. I would like to know what's under under that card, please.
Let's see what's underneath.
Okay. All right, so that's great. That's the best card to see.
Okay.
I'll get you started. Best of luck.
Yeah.
Card counting is frowned upon by casino owners, but it's not illegal. In this case, Weinstein's childhood friend owns the casino. So today we get a rare chance to see how he does it. In blackjack, you try to beat the dealer by getting as close to 21 as possible, without going over. Card counters are like star traders, assessing risk and reward at every turn. Both use probability to make informed guesses about the future, placing the right bets at the right time.
That was very important. Let this sink in for you guys one more time, because this is what trading is. It's about looking at probabilities and determining how much risk you want to take with the probability stacked on your side. Because when you're counting cards, basically you're just counting how many face cards are left in the deck. If there's a lot of face cards left in the deck, now you can start betting a little bit bigger because now the odds are more in your favor, especially if you're playing multiple hands. So watch.
In blackjack, you try to beat the dealer by getting as close to 21 as possible, without going over. Card counters are like star traders, assessing risk and reward at every turn. Both use probability to make informed guesses about the future, placing the right bets at the right time. Here's how it works. Most systems group cards into simple values. +1 for low cards, like 2 through 6. The value is 0 for middle.
Right? So these are +1s because all the smaller cards that are less than 10, they're all coming out, right? So you know there's more face cards in the deck. So you add, it becomes a higher count, right? If you get dealt a face card, then you subtract the count. You want a high count because the higher the count, the smaller the lesser cards are out, right? The cards below 10. And so you know probabilistically you have a higher chance to win, and then you can bet more.
Cards like 7, 8, or 9. And -1 for high cards, like 10s, face cards, and aces.
Right? It's -1 because if the face cards or the ace comes out, you got to subtract a point because that's going against your favor, right? Because there's less of them in the deck.
Every time a card is played, these values are added to get you what's called a raw count. Let's just say the dealer played a 10, a king, and an ace. Since each of those is worth -1, added together, our raw count drops to -3. When the count is negative, it means there are more low cards than high cards left to play. So the odds are working against you. But a high count means more big cards are coming, which could give you an edge. But it's not that simple. Dealers have more than one deck of cards. To get to what's called the true count, we have to divide the raw count by the estimated number of decks remaining for the dealer. In our case, let's just say there are 3 decks left in play. So our count is -1. That's our true count. And you have to track all of this in real time across multiple hands for hours without making a single mistake.
Are you aware of what the count is as I sit here with you? Okay, but what's so neat is I'm like, it's so negative. There's so many little cards that are going to come out.
So many little cards came out.
6-0, okay?
But we were due for it.
We were due. And so this kind of thing of knowing the future, everyone wants to know the future, right? And so that's one of the meta pleasures of card counting because so rarely in our life do we know the future.
That's so key. People are addicted to gambling, to trading, because they want to be able to predict the future and feed their ego. Like, oh, I was right, right? But that is the wrong way to think. You know the future is not certain. There is no certainty, 100% certain that this stock is going to go up or this index is going to go down. You can only think in terms of probability because there could be a war. We are already in a war, right? We don't know what's going to happen macro events wise, but we can predict using probabilities of what's likely to happen. And that's what we call the normal distribution curve. So let me just go and put on my teaching hat. So let's go into my teaching mode here. You guys know I'm a math teacher, right? Shout out to Cal Hills, Milpitas. So we know that statistically, right, we are just playing data. We are looking at what's called a normal distribution curve, right? This gives you an ability to probabilistically say that, okay, if the stock price is at $100, all right, we are at $100, we have a 68% probability that it's going to stay between 110 and 90, right? Just theoretically, I mean, just intuitively, that makes sense, right? Yeah, if the stock can stay in between 90 and 110, yeah, that's about a 68% probability. But if you think that the stock is going to get all the way up to 115, well, guess what? The chance of it getting here is going to be something like 20%. Right? Because look, if the stock is currently trading at 100, it's got to get up $15, right? Just for you to make money. Because this is the bet. The bet is, I think it's going to get up to 115. If it doesn't get up there, whatever you paid for that bet, and this bet always has a price. This is called the premium, right? It might be going for $2. To buy this bet, you got to pay $2 a share or $200 for 100 shares, which is what one contract is worth. And then if this stock, let's say, goes all the way up to 120, you're like, oh, shoot, I won on this bet. You know what's the beauty of option? Guess how much you won. So I'm going to do a quick math for you, all right? We said it's Friday. Let's get our brains working. So if you have the right to buy the stock at $115, that's your bet. You're like, you know what? I think it's going to get to 115, right? How much did you pay for this bet? We paid $2, right? A share. So we paid $2 for this bet. So the break even, this is what most people don't understand. The break even is $117. Why? Because if you have the right to buy it at 115, but you're paying $2 for that right to buy it at 115, right? The stock needs to close above 117, the 115 strike price plus the premium or the bet, right? So the stock actually has to go above 117 for you to break even. Now, anything above it is pure profit. If you go all the way up to 120, guess what? You have the right to sell it, right, at 120. No, you don't have the right to. You bought the 115, which means you are able to buy the shares at $115, right? But you could sell it for $120 in the market. So you just made $5 a share, right? Or 500 since it's 100 shares for an option contract. You just made $500. But remember, you had to pay a bet. Remember the bet? You had to pay $2 or $200. So your net profit on this trade is $300, right? Because you made 500 because you could buy the stock for 115, go and sell it for 120. So that's $5 or $500 of profit. Remember, you got to subtract the cost of the bet, which was $2. So your net profit is 300. Do you see that? Here's what's even more amazing is that what is your percent return, right? Most people, when I teach my math class, you always got to think in percent returns. How much was this bet? So your risk was $200, right? That's the most you could lose, 200. How much did you make? Well, we made 500 minus the $200 bet. We made $300. So look at this. What is your percent return? You must divide. How much did you make? That's $300, right? $300 profit is how much of that from the initial $200 risk. This gives you 1.50, right? Multiply that by 100% is 150% return. This is what leverage looks like and you just saw it in action, right? This is what you're gonna learn in my masterclass, my academy, where I'm gonna teach you how to use math and money and your mindset to build wealth and accelerate your wealth in the markets. Because once you understand the math behind it, everything else is just the execution. You just gotta trust the process. But first, you need to learn the process. You need to learn the probabilities and then start to trade like the house, because the house always wins. They always trade with the greater than 50% probability of winning. That is called the trader's edge.
It's a game of patience. I would say a lot of things are a game of patience, even if people don't realize. You know, like investing, you could say, is a game of patience. It's not so easy to find ways to beat the market all the time or often or at all. I think blackjack may teach patience, and we might be sitting here for an hour before I make a big bet.
Did you know you'd be good at it?
I was always very good with numbers, mental math, even from baseball cards, batting averages. All right, so now we have 11. Basically, you always want to double your bet when you have an advantage. Here, we know we have an advantage because we have 11, and the next card we always think is 10, right? So 21.
Card counters know they have an advantage when their true count is higher than 3. That means a lot of low cards have been played, and more face cards and aces are left in the deck.
All right, so as a trader or as a card counter, you know now, because there's so many low cards out, there's a lot of face cards still in the deck. So now that the probabilities are on your side, now you know to bet more or to take that risk, right? It's called high probability trading, knowing when the odds are on your side and then risking your money a defined risk way for the potential of the reward. And that's the beauty of trading. You're actually getting rewarded with money, and you can see your money grow and go down. And it's gonna be a reflection of how good you are as a trader. How well can you execute your trades? And that's what I'm here for as your coach, is to help you execute it with confidence, with purpose, with the goal. Because if you're trading without any of those, the money is just gonna disappear. The market is going to destroy you because it's gonna prey on your emotions. Your number one obstacle to your trading success is your emotion. That's why my method works. I remove the emotion from the trade. How? By using the 3 M's. The math. If you can trust the probabilities and the math, it allows you to follow the system more. The money. If you trade small, then you're going to not care about losing, because people who lose trade too big. There's one thing that kills, and that's size. Once you start revenge trading, you start doubling down, you start to get on tilt. That's when you blow up your account. So by trading small, risking less than 5 to 4% of your entire portfolio on any one trade. That way, when you lose, you don't care, right? If you're at the blackjack table and you're just betting $10 a hand, you just follow the process. You hit when it says hit, you stay when it says stay, and you just follow the blueprint. It's when you start to have $200 on a hand and you're like, oh, should I hit? Oh, it's 15. Oh, I don't want to bust. And then you start to do things that don't mathematically make sense, right? Because you got to trust the math, you got to trust the money management, and then you gotta have that disciplined mindset, because your mindset is what's gonna get you to the finish line. You need to have the wealth mindset, the long-term game, to make sure that you trade with discipline, with godly discipline, because in anything in life, you can have a plan. You wanna lose weight? All right, I can give you a plan. But the hard part, the true growth, and realizing that goal is how can you execute that plan? And that's where I'll be there. I'm gonna help you execute that plan. I'm gonna be by your side every step of the way so that you're gonna have 10 trades under your belt, so that I'm gonna walk through each click on your trading platform, making sure you're using the right orders, that you know how to use the tools of your trading platform. And then I'm gonna make sure that your risk is defined, making sure that you have the right reasons for getting in. I'm gonna walk you through the whole thought process. It's called the trader's blueprint, where we go through each step one by one. And as long as all those check boxes are marked, boom, place the trade. And at the end, you don't even care if you win or you lose. All you're doing is focusing, and you fall in love with the process. Trade small, trade often, and let the probabilities play out. By trading small and often, you let the random occurrences smooth out, right? Because it's just like flipping a coin. If you only play 10 games, you only place 10 trades, you might be right on 8 of them, right? But if you do 100 trades, now you might be right on only 70, right? The more you play the game, the more it gets to your true odds. And that is the edge, is making sure that we do something consistently, repeatedly, and profitably, just like a business. Because in the end, trading is our business, and we got to treat it like so. Income, expenses, and as long as our monthly profits are greater than our losers, we're going to be able to generate positive income. You guys with me? All right, let's get back to the video.
This is when Weinstein knows he can make a bigger bet.
So in investing, if you know you have an advantage, if you smell that there's something mispriced, you want to make a bigger bet. Here, even though we're in the middle of the investment, right, we get to double down, okay? And we're going to hopefully get a 10. It's the hardest double down because we're up against the dealer 10. We didn't get everything we needed, and we managed to tie, which is actually okay. So like betting your edge is such a good training ground for this game when you get to Wall Street. Problem with investing in stocks is you don't exactly know if you have an edge. You think Facebook stock's cheap, you think Uber stock's cheap, but you're going up against the collective wisdom of the entire market. One of the interesting laboratory experiments in blackjack is we know what the odds are, and given the odds, we can come up with a perfect bet, given our risk tolerance, given our bankroll. In investing, it's harder.
Weinstein invests in something called closed-end funds. This is simply a bunch of stocks or bonds packaged together and listed as a share. It means getting more for less. That's where Weinstein sees opportunity.
The reason blackjack is very similar to what I'm doing in closed-end funds is what I love about closed-end funds is I know the counts. There's the counts in blackjack, there's the discounts in closed-end funds. You know, we're sitting right now at flat count, actually.
We're at net asset value.
Exactly. You're good at this. When there's a discount, the investor has an edge. And in blackjack, when there's big cards to come, the player has an edge. And so we know what the edge is. In blackjack, we know what the odds are. In closed-end funds, there's uncertainty, but we know how cheap we're buying something.
Just like any other Wall Street investor, Weinstein.
You see this? It says insurance on the table itself, right? This is the game that we're playing, folks, right? They say, oh, you could actually buy insurance from them, right? It pays 2 to 1. See, it's all a game, and wealth is just a math equation. These businesses, all they're doing is playing the probabilities where the edges are on their
Weinstein will
side.
wait until he finds his edge, in this case, the discount, to place his biggest bet. But whether it's blackjack or investing, having an edge is never a sure thing. You can't control the next card or the market. You just try to play the odds when they tilt in your favor.
I think is almost as close as you can get from a casino game to a Wall Street investment.
How long did it take you as an investor to not get emotional about markets?
I think some of it comes from even this game that I lose so frequently. And I think one good thing about sports and about games where losing is a part of it, you never have like a perfect record, is that it teaches you to regulate your emotions in that way. Okay, we doubled down before.
That is such a huge concept right there. This game allows you to accept losing, right? Because in trading, losses are inevitable. But as traders and gamblers, we try to avoid loss all the time. We hold on to a stock too long. We let it go all the way to expiration. We move our stop losses down, right? We do everything in the world to avoid a loss. It's called loss aversion. We would rather avoid a loss than actually win. There's a psychological study that actually says that feeling of avoiding a loss is stronger than that feeling of when you actually win on a trade. So because of that, the retail traders, they lose their money, and then the institutions know how retail traders act psychologically, and they're able to take advantage of that. So being patient, knowing that you're gonna have a bunch of losers, and then waiting for that time when the opportunity is right, and you're able to then bet a little bit more, risk a little bit more for a bigger profit, that's how you make up for all those small losses, right? You can make up for 5 losses in a row with one trade if it goes in your direction with asymmetrical returns, right? In trading, in options, you could risk $1 to make $5. You could actually have a 5-to-1 risk to reward ratio. That's what makes this game so fun, because with casino games, you rarely get that type of ratio, right? But in the stock market, in the options market, you could do a lot of high returns. Sometimes you could get 1,000% returns if you bet on the right time.
11 against 10. So now we just won $400, plus the double down is $800. And so we're now ahead. Fist bump, a little fist bump, we're ahead. Luck is a major factor.
You can't be upset when you lose money on a good bet.
I think in these kinds of games, people think luck plays a huge role, and it does. And in investing, they think it doesn't. They think they were right because they were smart. And I think luck plays a very big role, and it takes a very long time to be able to separate who was lucky and who was good.
For Weinstein, the intersection of cards and finance isn't just about hard math. It's about time, discipline, and emotional control. To play the long game, you have to endure losses, sometimes substantial ones, and still trust that the edge you've calculated will ultimately work in your favor.
So what was the hardest time you've ever lost money?
It was 06, and we were never not up a lot. It was the rapid fire loss of a few $100 million, where I just never had that happen before. I think one of my talents is the ability to process tough times and see the bigger picture. And I think some of it may be connected to feeling lucky as a kid to have been born, coming from a place where my mother, being born in the Warsaw Ghetto, her odds of surviving just simply being a Jewish person born in Poland, out of 3 million Jewish Poles, only 150,000 survived. So understanding that as a kid and feeling so lucky that I'm here, I think that also, plus the learning about loss by games, I think helped me be able to process losing in the markets and trying to keep a cool head. We're getting near the end. This is the last hand. I should have put more out.
Okay.
I thought we had one more hand in us. Here, no, hold on a second. Hold on. Dealer, if it's okay. The reason we made the biggest bet of these multiple hours we've been sitting here is there were extra 10s and aces.
Okay.
Look at the 3 cards on the table.
10s and aces.
Right? And it's so nice that we end here, because this is one of the great joys of knowing the future a little bit. And we're so rewarded, because if the dealer had the ace, we can only lose our money. If we get the blackjack, we get paid 150%. At least one of these is going to be a 10 for us, and you're not going to have a blackjack. That's what we want, and then we end super strong.
Okay.
We're already ahead, and we can end up way ahead.
See what the face card is? Show the 4. Blackjack. 20. Another blackjack.
Oh my God, this is amazing TV.
Okay.
Oh my God.
Was that amazing?
Anybody else got something they want to share?
He
Native body wash.
just
It's
showed
got no
you
parabens or
theoretical
sulfates.
probability, right? Counting the
Hello?
numbers to
And a 24-hour
actualize
freshness.
probability, because that's all this
Good.
is turning probabilities.
Georgia
into
plans
profits,
weddings with the
right?
precision
If
of a
you see bet
watchmaker.
that has a
Surprises
probability, well,
aren't
it's just
her
a theoretical
specialty.
probability. You
With
can
the
just
venue
watch it go
flooded,
up and down,
Copilot
right?
helps
But
Georgia
once you
rebuild the
put
plan
money
in
on the
minutes.
line, once you
Georgia
actually
runs the
put
show.
a trade
Copilot
on,
helps
and
keep
there's
it
a
on track.
risk of you losing.
So how
now
good does it
that
feel to save on your
probability
commercial
becomes
water
real.
insurance with
Now
Geico?
every
As having a great hammer.
probability that goes up or down.
Can't touch this.
This is the beauty of trading.
Just put it up.
You
It
can
feels
make
good
money,
to get your savings
lose
on.
money.
It feels good to Geico.
Thing that separates the gamblers from the casinos is that the casinos trade math, they know how to be patient, and they know how to take advantage of opportunities when they present themselves. By joining my course, I will show you my method using math, right? It's all about looking at patterns, because patterns are used to make predictions A pattern is just a trading psychology of what people are doing. If you could recognize patterns of what retail traders do, now you can build a high probability trade with bets. You can sell them and then you turn them into profits. And you could do it in 5 minutes. You could do it in 20 minutes, in one day. There's endless opportunities out there. So if you guys are interested, I would appreciate it if you guys just subscribe, join me on this journey, and I would love to share my knowledge and show you what it takes, because I don't want to just preach it. I want to teach it. I want to teach what I trade so that you guys can learn, but also trade what I teach so that you guys can see that this method works if you just trust the math, you trust the money management, and you trust yourself. Because to be successful, you got to trade with confidence, trade with clarity, trade like you mean it, trade like Nick. And in the next video, I'm going to teach you this, how poker is like trading. Because poker is when you start to use money management and you start to analyze how people think. And then that's when you know when to go all in or when to fold, right? There's so many analogies. And this series, I'm gonna go through each different movie scenes and show you how the analogy, the parallels of gambling, trading, betting on sports, anything that has an outcome, a winner and a loser, they all are based on probabilities. And if you can learn how to sell them, now you could be your own one-person business, selling insurance on stock, selling bets on stock. So if you guys want to see me do it, subscribe, make sure you guys like, help the algorithm spread this out. And I'm going to show you how to turn $5,000 into $10,000 in 3 months. That is my goal, is to generate 1% a day, because $5,000 is only $50 a day. Do you think I can sell bets and make $50 a day with $5,000 of starting capital? That's my goal. So if I'm making $50 a day, that's 20% return every month. After 3 months, that's a 60% return. So out of $5,000, that should give me about $9,000. But the reason why you're able to double it is because of the law of compound interest. This is where the power of money and time work in your favor, right? Because if you can compound your money every day, now you can actually double your money faster. Because through compounding or exponential growth, you're able to reach your goal a lot faster. So let me put on my teacher hat, or should I say my teacher glasses, and give you another math lesson, right? Most people know about a linear line, right? The slope is the same, simple interest. What is powerful, what Albert Einstein called the eighth wonder of the world, is compound interest. This allows you to double your money from 3,000, let's say. You could double it to 6,000, and it's through what's called the rule of 72. It tells you how long it takes for you to double your money depending on your return. So this strategy that I'm gonna teach you guys is a powerful compound trading strategy, all right? So what I'm gonna teach you, my method, is a compound, but not just compounded yearly. It's not just compounded monthly. This is compounded daily by selling premium, collecting bets again and again and again. So doesn't look like I'm sharing my screen. Oh, all right. So I actually did go a little bit over. I'm gonna end this, save this for the next lesson. So we're gonna talk about, hold on here, how poker is related to trading and how the game of probabilities applies to both. So here's a little preview of what we're gonna do in our next episode. There we go. And let me show you the analogy of poker versus blackjack. Because blackjack is a game of patience, waiting for the odds and the cards to stack in your favor. But you might have to wait an hour before that setup occurs. So it's about patience. Poker is more strategic. And this is what you'll see in the next episode.
Blackjack teaches us how to wait for the edge. It's a numbers game where probability is known and optimal moves can be calculated in advance. But poker is different. It's messier, less about certainty and more about psychology, reading the table, managing incomplete information, and adapting on the fly. It's a game that's less about fixed edges and more about risk, bluffing, and knowing when to fold or go all in. Hi, guys.
Hi.
Hello.
It's so good to see you. Today, I'm sitting down at the table with two players who know this better than most. Liv Boeree, astrophysicist, top female poker player in the world, and Galen Hall, a former poker pro who went on to start his own hedge fund. Lucky for me, we're not playing for money, just my pride. I don't exactly know what I'm doing here.
All right, so that's a little teaser, what we're gonna watch in our next stream. So make sure you hit that like button and get the notifications, get all the notifications, because my goal is to stream every day, every trading day, so that you guys get good content, you guys see real trading, real teaching, real profits. So I'll see you guys in the next videos. Peace out.